Hello everyone, it's Melissa with Atlas CFO, and today we're talking about current ratio. So the current ratio is one of our ratios that a lot of our outside partners like to look at because it's telling them how much room we have in our cash activity. It also can be an indicator of profitability. So it's really important to know your current ratio and also know what is expected of a current ratio. Personally, I like to see a current ratio of above 1.2. Now, that's not always possible, but it certainly is a minimum that I like to see. We want to use a balance sheet that is either a month-end or year-end balance sheet whenever we calculate a current ratio because we want to make sure that we've already reconciled everything, we have our under and over billings posted, and that our current assets and current liabilities are as most accurate as they can be so that we know that our current ratio is the right information. So I've got an example balance sheet that I've created that has all of our information in it. I'm assuming that it is reconciled, tied out, and it is working. Now I get to calculate the current ratio using my current assets over my current liabilities. So let's just see what happens. Go down, we'll get our current liabilities, current assets, and survey says 1.15. I really wanted 1.2. Well, now we can look at what it would take to increase that. We could look at our accounts receivable, our under billings. We can look at what is happening in our organization to find out how we can make that a little bit higher. If this is interesting to you and you would like more ratio analysis, we've got a treat. On our website, we have a free scorecard template that you can download, and it has ratios galore, graphs, all kinds of fun stuff. So if you want to know more about what kind of ratios will help your business or that you can track, please visit our website at atlascfo.com and download your free scorecard today. It's been great to spend time with you. Talk to you soon.